Can you hear me?
Okay. Yeah, I can hear you.
Yeah, I was saying that as we start with our psychological thing, one thing that I know is that people are struggling with knowing where to put stop losses, knowing where to take targets. When I'm saying where to put stop losses, they don't know how much to risk. They enter a trade without knowing how much they are risking first. You find someone with a $20 account, let's say buying this or selling this instrument, VIX100. Once you enter here or anywhere in the middle of this trend here, it's gonna take you out because of this candle here alone might be around 60 $80. This candle only.
You. Oh yeah, especially on this 100, yes.
Yeah, this one candle only can be around $60. If you enter wrong, a sell maybe, then it's gonna take $60 in one trade out without you knowing where to put the stop loss and whatnot. So with targets, people would enter properly as I would give a signal here at this area. Find someone enters right, but then take profit here because they think, no, it's gonna come back now, it's gonna take me out. No. So if you're risking properly and then you entered your market, as having a plan and having a risk management plan. Let's say you entered this trade here, and your stop loss is here. This is around $20 to $30 risk on this instrument. It's about $30 to $20 risk here. So let's say you entered here, fine. Market gives you $30, $40, then it comes back, and you say, shit, I'm going out. It's gonna take me out. So why not let it take you out? Because already you wanted to risk this $30. You said you want to risk the $30. And then you were comfortable with risking the $30. That's one thing that is affecting a lot of traders. Because once they see the market goes in profit and then retrace back, they say, fuck, I'm going out of this trade. It's going against me. I'm losing my $20 that I made on the market. Forgetting that they wanted to risk this $20 to $30 that they said they want to risk in the market.
So you need to get it.
So
just like the one you gave us yesterday as well. They did 100S. It took out.
Yeah, took us out. So that's why I even told you on the group, guys. I told that other person that was asking to put more trades. And no, you can have the methodology that works in the market as much as it can, but when you over risking, you're gonna lose everything.
That's true.
Yes.
So you're small.
So let's say you like I'm saying now, you're risking this $30. You're risking it for $200. So why not let the market, as you have your own strategy and as you have your own plan, the market is at an area of value. First of all, the market is giving you your signal to enter. Why not let the market do whatever it has to do? Because of you waited for the market, it gave you that profit, Nyana, retraced, and then you want to get out of the market, only to find out the market is still going to go your way. So people who do that, fine, they miss it, they get out here because of it retraced, and then the market pulls back up, and then someone wants to enter here again.
And then
the market pushes up and then goes down. You see, you're losing. But then if the market, because in this trading thing, the only thing that you have to know and have to psychologically understand is that your account is the only thing that matters. It doesn't matter what the market do. Doesn't matter what the market has to do after what you have applied. Once you enter here, the market gives you this profit, a little profit. You take your stop loss, you break even. That's it. That's the only money management or risk management you have to do, just to preserve your account. Always try to break even when the market gives you something. And then when market retraces and goes up again, maybe take this stop loss below the previous low, higher low, I mean, so that you also have something. You also have $30. This $30 you risk, you having a one-to-one risk reward ratio now. This will help your psychology in a very proper way, because of you're not rushing to take the profit, and you're also not rushing to close a winning trade. You understand? People are rushing to close winning trades, and then once the trade goes their way, they wanna force an entry again where they don't have the reason to enter the market. You understand?
Okay.
So what I'm gonna tell you is that you always have to be obsessed with the process, but not the outcome. You don't have to be obsessed with what the market will give you and saying, I'm entering here, I'm looking for $500 in this trade. No, you don't have to look for that. I trade because of the process. If the market gives me an edge, if the market gives me a reason to enter this market, that's the only thing that has to matter to me, the process, not the outcome. Now, what I'm saying is that if this market meets all my requirements, it's at a trend line support. It gives me maybe, let's say, an engulfing candlestick pattern, and then it's on my rules. It's on my rules, and it's at an area of value. Fine. The rules or the process says enter the market. I'm entering. So I'm not gonna care whether the market is gonna give me this or the market is gonna do this. I don't have to even know about it. Understand? Because once you eliminate the expectations in the market, once you eliminate expectations, then your trading will become more clearer, because of you're not looking for the outcome, but you are looking at the process. You're applying your methodology, and you only want to know whether the methodology is working, not the outcome. You understand? Because immediately you enter this trade, you have to already know your risk. You have to already know that I'm losing. If I have $100 in my account, I know that I'm losing $20 maybe, let's say. You understand? You are losing 20% of your account. It's fine. If you want to lose the 20%, fine, lose it. But you have to make peace with it before you even apply it. You have to say, I'm entering this market. I know I'm going to lose $20 of my $100, and I'm fine with it. And then once you enter the trade, know that there's no turning back. Enter the trade. If the trade takes the $20 out, be fine with it. Understand? That's the most important thing on the psychological part. And once you are fine with it, you're not going to have fear again when the same methodology that you want to see happens in the market. You're not going to have fear. If it happens again, it reaches your trend line and it's at an area of value, you're going to apply the same thing you applied here. Understand? And say, I'm gonna risk my $20 again of that $80 that is left on the same strategy, and then it's gonna reward you because of you are consistent now. You are following what your set of rules are saying. So in the market, if you're looking at losses and say, I'm scared now. The last time it took me out, what if it takes me out again? Then you are in a wrong place. Your mindset is not okay. What you have to do is that if it takes you out, it's fine. I'm gonna apply it again. on the same area here. I'm gonna apply it again here until I get what my strategy is saying. If this happens, comes back here, I'm gonna add again until one thing happens, until it breaks out or until it breaks out. I'm still gonna trade in this area, in this zone. I'm still gonna trade in this zone. Understand? So the psychological part comes when you don't have a planning, when you are expecting a lot out of what you don't know. So what I always do is that when I have maybe an account that I funded, let's say I fund $100 just to make sense to you.
Okay.
I find $100. My psychology helps me when I'm saying on this $100, I'm gonna open 10 trades. With this $100, I'm gonna open 10 trades. Understand? With my $100, I'm gonna open 10 trades. And then on these 10 trades, $100, I'm gonna open 10 trades. Right? Understand?
I understand. Yeah, I'm with you.
Okay, let me redo it here. $100 for 10 trades.
So which means you risk $10 per trade.
So it means that I'm willing to lose $10 a trade. So this is my rule, and this will be very important to apply when and you have to stick to it. You understand? So when you open a trade, it doesn't matter where you open it. You now have a sample, and you're gonna record all this. You have to have it. You have to have them on your journal, and say first trade gonna be, let's say you're saying a buy or whatever, and then you put your reasons for why you bought, why you did this, and why you did this, and you always say the outcome of that trade. Is it a lose? Is it a win? Is it a lose? Is it a loss? Or is it a break even? Understand?
Okay.
Yes. And then second trade, the same thing. The same thing on the second trade, you do it. The same thing on the third and the fourth and the fifth and every trade of this $100. It doesn't matter the outcome now. You understand what I'm trying to say? On these 10 trades, it doesn't matter what was the outcome. The only thing that you are looking for now is understanding whether the methodology that you are using, you are following it. And then on these 10 trades, how many trades did you win? So I'm calling it a sample trading. It's sample trading. On those 10 trades, if you had four losses and 6 wins, understand? Then you know that, okay, my strategy is working. And then if you have, let's say, let me put it like this. On those 10 trades, you risk the $10, and then one trade gives you $200. You risk $10 for $200. So fine. Let's say yes, let's say on those 10 trades, you lost 7 trades. You lost 7 trades, which is $70. But you won 3 trades, which was $600. Without closing, you follow your methodology. Without you enter, you leave the market to reach your target all the times. Or you enter, you leave the market to take you out all the times. You understand what I'm trying to say?
Yeah, I understand perfectly.
Yes. You don't prematurely close it. You don't prematurely close when it's going against you. You always enter and leave the market to do what it has to do. You understand? The only thing that you do is managing the trade. You enter here. When the market gives you the profit, you move your stop loss to break even. That's the only thing you do. That's the only thing you do on those 10 trades sampling that you have to do. You only move your stop loss to break even when the market gives you the profits, and then it has a pullback. You understand? You only move your stop loss to break even and leave the market to do what it has to do. If your target is here, leave the market to reach your target. If your target is on this level here, on this trend line, leave the market to hit the trend line. And that's how you're gonna know, and that's how you're gonna be a profitable trader. Because once you enter the market and then you prematurely close it here, you close, and then the market gives you whatever it gives you, you're gonna have the fear of missing out all the time. Because you don't have a reason why you closed this market here. You don't have the reason why you scaled out. No. So even on the losses, if you risk your $10, and then let's say the $10 stop loss is here, if the market comes to your $10 and hits you, leave it. Your plan was to lose the $10. So let the market take the $10 out. Because you already have your 10 sample trades that you wanna look at. So if you lose 10 trades and then you're following this strategy properly, then there's something wrong with the strategy now. You have to tweak the strategy. You have to look at what went wrong. How did I enter the market to lose the 10 trades, and what can I change now on this strategy? You understand? Now the problem is no longer you, because you followed everything you've written down. Now the problem is the strategy itself, because you've lost 10 trades in a row. You understand? Now you tweak the strategy. You still following me?
100%.
Yes. Okay.
Because now also what I'm see what we're looking at now. The previous one, the previous touch, the one before. So if I had to alter my not that one, the one before.
This one.
Another touch. Yeah. So which means it would have taken me out down there to put it back up as well if I had to move my stop loss.
You're saying this one?
I think that's one.
So you mean these weeks they would have taken you out?
No, not the weeks. See, it went down and then it went up and then it made it back.
Yes, it went down. Listen, yeah, okay, yeah, you're making a good point. Let's say you entered here, right? Yes, and then your stop loss is above the weeks. Let's say you entered here, your stop loss is above the weeks. Fine, the market, and then your target, let's say, is on this level, right? Yes. So if market does with your $10 risk, market does this, comes back, you don't close the trade. Market then gives you this. You take your stop loss to break even. You take it to break even, right?
Yes.
Market comes back. Let's say it takes you out. You didn't lose this trade. You didn't lose this trade. Now the market is back to your area. You look for another possible trade. So the first trade that you took, it's a break even. The second trade now, using the same methodology. Second trade, you're recording all this. Now this is the second trade. Yeah. You enter the market using the same method that you entered here. You enter here with the same method. It gives you, okay, your target again on this level again. It gives you all the profits without you closing it. You see, you don't close it prematurely. You don't force trade to close. It gives you exactly what your methodology said. It's a win. Second, it's a win.
Second trade is a win.
Yes. Another thing. Then you wait here. You use the same methodology used here and here. You understand?
Yes.
The same methodology you use here, you use it here. You enter here. The target here. It's gonna give you.
Okay.
It's gonna give you the third trade. It's a win. And you can imagine you're losing $10 on this trade. You're risking $10 on this trade, but you're winning over $100 on this trade. So two trades already, two trades that we have spoken about here. Only two
already
trades.
doubled your account.
They have tripled in your account. If you have a $100 account, this can give you $200 to $300. This can give you $400 to $500 by just following a simple rules. So once you have a 10 trade sample, it's best to track your process, you check your progress, and you check whether the system that I'm using is working or not.
And that's what gives you the confidence to enter traders. And once the psychology part of it is sorted.
Yes. And then there's one thing again that I wanted to teach you. A lot of people are struggling with it. A lot of people are struggling with this thing. A lot of people, they don't know how to change their bias or their beliefs when it comes to the market. If someone sees that this market is an uptrend, or this market is okay, they believe in their mind. They say this market is just a belief because of you're not following the strategy. You just believe that the market is going to go going up from here. I believe that it's going up. Then fine, market does this. It goes there, and then all you think is that the market will reach this level. You think that the market will do this. It's the belief you have. So people, they don't change. You have to always change your beliefs when it comes to the market. Go with what the market is showing you, not with what you believe the market will do. So people are going with what they believe the market will do. They think because of now, this double bottom is here. The market is gonna shoot up all the way because I've got the double bottom. The market will do this because of the double bottom. No, it doesn't work like that. You always, okay, let's say you got this double bottom. You enter the market, right? The stop loss, fine. Market gives you profit. Market gives you what you thought, pull back, it's fine to your area, you don't get out, market goes up, breaks this level. Then people will say, yeah, now I was right. The market is going up. Fine, market pulls back. Let's say you moved your stop loss now from here to here, to break to here. Now the market comes back, it takes you out with a little profit that you got. And then you still believe that the market is going up. Enter here. Market gives you this bullish candle here. Right? You say, yeah, now this is a right sign that the market will push higher. You enter the market, you don't move your stop loss or you don't move your thing. The market comes here, takes you out. You still believe that the market is going up when you're still in this area. You enter again, say market will go up. It takes you out. You enter here again, say market will go up. It takes you out. You lose hope and say, fuck, market is going down now. Let me sell here. Sell. goes up.
Yes. At first, I did when I started. It was back what I used to do. Actually, showed me the strategy.
Yes, that's what most people do. They're forcing it. They don't want to change their mental thinking immediately when the market gives them reasons to change it. Because even me, in these areas, I was buying. You saw the signals I was giving, right?
Yes.
Yes, we were buying. But immediately when I saw this happening, I stopped giving the signals of buying, and then didn't get this trade because of we were looking at the buy. But immediately when the market broke this level and came back, this is where I was looking for buy signals. And then this is where I got it.
Yes. Yes, that's the one.
So it's
So
just,
that's
it's just
why
a matter of changing what you think and what you see. Don't force the market to do what you think it's gonna do.
okay. So that is why you use 1 hour time frame, and your take profits are always the second
Yes, yes.
resistance.
1 hour time frame, my take profit are always on the resistance or the support. Because of I know if this trend is going down, it's gonna do exactly what it's doing now. It's gonna give me this, and then from here, it's gonna have to come to this level. From that level, it's gonna have to come to this level, and then from this level until I have a break of these two trend lines. Until I have a break of these two trend lines, I'm gonna trade within this trend line. It's a proven methodology. It came to this level. Understand? And then it came to this level. It came to this level. It still got it's almost on this other level now. And then if it rejects here, it's gonna come to this level.
Okay, makes sense.
Yeah.
And then the trend goes back up, breaks, it's still gonna do the same thing.
Yes. One thing about it's overall it's automated. It's not moved by people, or it's not moved by banks or whatever. It's an automated instrument. It is derived from S&P 500. You understand? So it's what most people don't know about this instruments. They are not worked by
Oh, this one,
by
this one is not
people.
moved by like currencies, it's moved by
There's no many sellers here like currencies would do, like when they say sellers are in the market, whatever. No, it's 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 it's
fully
it's a pattern. Like I don't know how to explain it to you.
it's pretty much like a robot, and understand exactly what you're saying.
Yes. It's
You have
automated.
to follow the
It's
algorithm at
automated.
time. Yes.
Yes.
So it's got an algorithm that will do this up to a certain point.
So
When
it's
a certain
yes,
value change is going to do that.
yes, exactly. It's gonna do this. It's gonna do this up to a certain point all the times. All the times. It's gonna do this up to a certain point where the previous data or the previous history said that after
Yes.
this certain point or after this period of this automation, it has to break or it has to break the point. It will do that. If you check the higher time frame of this instrument, it fell, it was like this, né? And then it fell like this. It didn't give like higher highs and higher lows on the higher time frame. It didn't do that. So it shows you that this thing it's not influenced by people or anything. Understand? Look at it.
Yes.
So
It just dropped, bro.
Yeah, it just dropped. Just dropped. If you entered here, these are millions here. Millions.
Look.
It's millions. Understand?
Bad man.
So it just drops, just drops, just drops, just drops. So if you are that person who doesn't change their mindset of saying it's going up, like this is an uptrend, right? If you are that person of saying no, it's gonna change, you're gonna buy here, takes you out. You buy here, takes you out. You buy here, takes you out. You buy here, you buy here, until you are tired.
Now I see why you use the 1 hour time. The 1 hour time frame is pretty much that's what gives you your entries and your take profits.
Yes, this is why you look for your entries and take profits. But you can use the lower time frame. You see now here, I don't see a reason for me to enter, but the price is at a certain area of value, right? So I would go to a lower time frame. I would go to a 15 minute and then check. So on the 15 minutes, without any doubt, I'm having a head and shoulders here, without any doubt. So it confirms my reasons to enter the market because I have this. Like this.
That's a shoulder, that's it.
Yes. This. And then this. You see?
So you would enter as soon as the neckline is broken.
So my entry on this instrument was here. Like here. Because this gave me a reason. This was engulfing.
Yes.
So I saw that the head, there's a shoulder here, and then there's a head, then there's a shoulder. And then after this shoulder, and then there's an engulfing candle to enter the market. Look what it does. Then this is take profit.
And then the previous one, there was also a huge shoulder.
And then
And it was coming down.
Yes, similar thing on this one. Similar thing. You see? Similar thing. It's very consistent. Even here, if it comes to this area, it's gonna do the same thing. Here. Understand?
Yes.
Or if the trend is exhausted, it's gonna break, come back, give you a double bottom, shoot out.
And shoot up.
Yeah.
Okay. It makes sense on the psychology. It makes sense.
Yeah.
Now, for the first time, now I understand what the 1 hour time frame, how important it is.
It's very important because of there's no much noise on it, and then you get clear entries, and then you get proper risk to reward on it.
And it's clean too. Yeah, there's not a lot of. Okay, I see, Bucky. I see.
Huh?
I see exactly what you're saying.
Yes. So yeah, man. Once you enter the market with saying anything can happen in the market, I'm not gonna look for profit. I'm not gonna look for anything. I'm just doing this as a process, and then
it will reward itself.
Yeah, it will reward itself as long as you're following the strategy. You're saying my rules are these. I'm following these rules. For 10 trades, trust me, you're gonna change your trading tremendously.
Okay, and makes sense. Because it's all mindset. People want to say what they believe, not what they see.
Yes. Every moment in the market is unique. Every single moment. You don't have to think about the losses that you had. Every moment is new.
Phew. I hear you, my king.
Yeah. I think we'll conclude
That's what I
our session for now, but there's still a lot of things that I'm going to teach you about this psychological part. But I've written this thing so that I can teach you this beginning part of psychology. Yeah? There are a lot of things that I'm going to show you. Psychology.
No, I'm ready to learn. I'm ready to learn. The more information, the better. Organized knowledge is the best because then you would know what to do. But pretty much, I'm trying to learn what not to do in the market.
Yeah.
And that's where the wisdom comes.
All right, man. We'll end our session here today. We'll keep on checking whether you are available or not for the next session.
Yeah, no problem, no problem. You must tell me now. You must let me know so we can hook up with you.
Huh?
Yeah, well, I'm in spring, so
Pardon?
so we can meet in June. Can you hear me?
Yeah, now I can hear you.
Yeah, I said when you're free, you must let me know so we can meet Tuesday.
I don't know if it's my connection or your connection, but I can't hear you. I'll sign out now, and then I'll give you a text on Telegram so I can hear you properly.
Okay, cool, no problem.